Hello, 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 everyone. Good morning. How is everyone doing today with more market insanity? Good morning, Davey. Good morning, Rich. That better be sarcasm, Rich. And how long can they continue it? How many cycles of the 5 billion sterling of bonds? Last I saw it was unlimited. Happy Wednesday, George. Good morning, Options 22. Good morning, Ken. Morning, Legion. Good morning, AP's World. So, guess there were some funds gonna blow up over in England. So now they're doing long-term purchases. Well, purchases of long-term bonds and hiking rates. Oh boy. Shall we live in interesting times? Good day, Christoph. So, might have put a short-term floor in the market. Long-term, this is not going to end well. Uh, let's see. What are we looking at? Retail inventory is creeping up this morning. We got Fed speaks today. Let's see what they reiterate. Let's see if they're going to still pound on the hike drum, especially with considering that the Bank of England's now buying and hiking. So, and we got Powell speaking. So I want some clarification today if they're still going to stick with the course or if they're going to get dovish, especially because look at this. The rates hike for that 75 basis point is dropping pretty quickly. Now 50-50 with the 50. 50-50 with the 50 point basis point. He had Apple warning last night about decrease in iPhone production, but things are getting bought up this morning pretty rapidly. So I'm watching at least for that short term. We could get those trap things with that little shake and bake pattern. What is I'm Christoph? Oh, we have two Christophs. So one of you is a fake Christoph. I'm going. You know what? I got to give the benefit of the doubt to the original, the OG Christoph. Let's see where else we sit. Oh, remember we're still in negative gamma, so we can still get rip your face off rallies, and we're in the zone for at least a potential short-term bottom. More market intervention, which weighs over anything with earnings after the close, though, today. And another very boring day. All right, so we get the nice rebound market. If we do on a 4-hour basis, this would be super aggressive, but a close above this last 4-hour high is an aggressive buy pattern, even front running this. Let's see. Good morning, Sashi. Good morning, Patrick. Yields getting pummeled. So, good morning, Baker. I mean, Gary Baker. Gary. So that's what I am keeping an eye on this morning, and still that shake and bake that we talked about yesterday. Cycles at the bottom and turning up on the 4-hour, at the bottom on the daily, at the bottom of the weekly. So let's see if this can hold. This would be the short term. The longer term would just be that shake and bake pattern and a return to the daily rotation zone, at least initially. We shall have to see. We're in some interesting territory now. So we had the Bank of Japan the other day trying to stabilize their currency. Now you have the Bank of England going in heavy into their long-term bond market. These central banks that created all these problems are now trying to fix it with more intervention. This is going to not end well long-term unless all these central banks go, hey, we'll just print money, go back to QE, and forget inflation. Forget it. Let's just rescue all the markets and all the market players. If they do that, then you'll get the major rip your face off rallies. We'll be at all-time highs again, except you'll crush over half the country that doesn't own stocks. So it's just not good. This is not going to end well. And I think this is going to end in a disaster for the Bank of England. And I actually think it's going to end up in a disaster for the Bank of Japan. When that disaster unfolds, we shall see. Insanity can go on a lot longer, so that's what I'm keying off of. I already covered it yesterday. We're still watching that midpoint area going into the open, and then the other side. Just really watch this 4-hour close to see if it does close above 36.53.75. If it can't sustain and we push down, remember 35.87 and then 35.56. If we do get another push down, I'm really paying attention. 35 before that, I'm paying attention to this 35.87 with the 200 week. If this does go splat on the open, especially with Powell speaking, then I'm really watching for that to connect with the 200 week, just as we've done. We've got the overnight. We have the official reconnection. The official reconnection on the NASDAQ. It was close. It officially reconnected. So that's that. We got the official after spiking down to the little short-term harmonics and reversing. Right now, there is no, besides these little reversal patterns, these little shake and bake reversal patterns. By the way, the NASDAQ, the key closing area I will be watching for. And these are not super strong reversals. These have decent probabilities, but they're not in the 70% range on the 4-hour. As 11,282, I'll be watching for that close, which is actually right near that significant level. Cycles again on the bottom on the 4-hour, daily, and weekly in the NAS. I'm playing everything really cautiously. The piping is not doing well in the overall market. No need to worry. Janet Yellen says everything is okay and operating normally and orderly. Nothing to see here. Yeah, no. I was talking about that before she even said that yesterday. That the underpinnings of this market are very, very fragile. If you start looking at liquidity, and she is clueless. She is absolutely clueless. And is she going to transition out after the midterms? It looks that way. And there's still, literally, she's still talking about climate change in this. You have major central banks intervening. We have mortgage rates now over 7%, which is going to get very interesting. We got to get rid of inflation. And by the way, everybody says we should pivot again now. I'll talk about this. I just haven't had a chance yet because I've been doing some surveys. And most of the people who really want the Fed to pivot, it's all based. It's not even based. They could care less about inflation. They could care less about a recession, even a substantial recession. They're only worried about the portfolios. They're only worried about the portfolios, which should tell you something. And since the majority of Americans do not own stocks, especially individual stocks, it will get interesting in the near future. So that's why I'm keeping an eye on. Remember, these bounce plays are for at least a short term into the rotation zone. So far, this has been a sideways correction, even with these spike down lows. This categorizes as a sideways correction so far. Dow, it's pretty much the same story. It's what I covered yesterday. I'm going to watch for these reversals to potentially trigger. The Dow would be the aggressive buy on only on that close above 29,169. If the Dow breaks down, minor is 28,750. Remember, the long-term thing is still bearish, so it's trailing. If you're trading from the long term, it's just trailing down stops. Then we're at 28.5. Russell, there was no, and now you might get a shake and bake based off the overnight, but it need to reverse above about 1695. That's the only potential pattern. And remember, we do have waning momentum and divergences setting up here also. That's the only other thing I'm keeping. But that does not, just because you have divergences, is not an automatic buy signal. The next major level is not down to that 1596 to 1600. You'd have to do the little short-term harmonics to get around that. DAX, we're getting that reversal now. I mean, Europe's going to still trade somewhat in sync with the Bank of England. If the reversal continues, by the way, this could be a potential buy signal tomorrow, but it's going to be tight with a reward to risk because you got the major breakdown level and the 25% harmonic and the daily rotation zone, 12,400. Our notes moving in sympathy. Moving in sympathy right now. Gonna keep an eye on a close above yesterday's high, and that would just be a short-term pop into the daily rotation zone. Other than that, there is not much going on. You did have this horribly sloppy little on the 4 hour little flag, almost a double pattern. It's already wiped out. Other than that, there's no great pattern on there. Dollar index, key pullback area I'm paying attention to now is about 113.46 to 113.50 initially. Then the bigger areas would be about 113. If it can finally start a rollover, then a little short-term correction. Other than that, not much. Getting that somewhat of a reversal. I mean, in the VIX, but it would really needs to break below this 32.40 before I really start getting slightly more of a bullish move in, and I'm really going to be watching 31s. So that's where we sit now. If we get something and the market starts going down, we tank now above 35. I am in. That's taking us into at least the emergency zone. Crude. I'll get to stocks. We have this 4 hour double I'm watching right now. You need a close above 79.51, and that's just with a return to the breakout zone and possibly 82.47 area. Here's your euro. Trying to put in some kind of bottoming move here. Here's your 4 hour. Yes, it is still a potential bottom. The does nowhere near confirming though, but that's where 97.016 is the confirmation point. Let's see. Yes, the end will be epic. I think the Fed has to stick to their rate hike plans. Well, we shall see. We've got Fed speaks going on right now. That's the only thing. Yes, crude was a 4 hour double bottom. I'm just catching up on the comments. So if you're looking for the crude, it's confirmed. It needs that 4 hour close for me. Yes, watch that 62%. I mean, we still might get the Apple bounce. You know, it's still, but the people I talk to, they're like, this is a gift. Apple on a pullback. Oh boy, we're just in insanity. It's still everything wants to buy. This is the pullback on Apple. Now you are correct. We have the projection harmonics still, and we have the key 62.5 options. You've got this. You're getting it down 146.50 area. Technically 146.59 or something, or 59, but at 146.50 is just fine. So that's what I'll be watching. Now, on the rally, we do have potential gap plays, but the first target for the gap play would not be the full gap fill. I'd be watching this little breakdown area between about 149.37 to 149 or 150 would be a first target zone on a gap fill play for Apple. Well, again, if you're playing these things to the long side, you have to keep your risk limited, and I would use tighter stops. This is not the time to go in heavy on anything to the long side. No, support lines have not stopped working. They're getting broken. It should tell you something. Nat gas, I did not peek at that yet today. Natty gas is closing in, and yes, the double still is in play. And based off this, especially, I would be looking to, if you're trading this to short side, this is close enough to the first stop area with that double bottom. I would definitely be lowering stops, but I would keep in mind if you were in it, this is where I'd be lowering stops. But from the bullish side, I would not lower it into the target zones for the double. Why? Because this double could easily return to the breakdown zone. This is sort of a teaching lesson. When I have something like this, there's no point in lowering stops if you're longer term bearish and playing the double top pattern. You don't want to crowd the stops too much, because you could trigger a potential double bottom, return to the daily rotation zone, return to the breakout zone, and then roll over. So, in what time frame, Tom, did we bottom? Because again, we are watching for a bottom. It is not a long-term bottom. So, peeking in on Tesla. We got to do Tesla and the Qs and the spiders. Tesla, breakout. If we do get that row with some of those shake and bakes, we start breaking above 283.75. 280 up to close to 290 would be the key area I'd be targeting. And then I'd be using about 292. Key support is 270, 775 area. We break below there, a return to 271.75, then possibly 265. Right now, it's in no man's land. Spiders. Again, this is if we roll over, especially around 9 a.m., watching for the gap fill. Other than that, I'm going to be keeping an eye on the S&P with the shake and bake, but the targets to the upside, the key resistance coming in about 368, then 360, then I'm using 369.35, a return to the rotation zone. We can actually flip also the harmonics now. We can also flip the harmonics. It's going to be virtually the same level, which is, yes, 369.52 is my next target to the upside. The only thing I start getting more moderately bullish with the spiders is you get above 370.60 for the gap fill. Other than that, it's just a short play into the rollover zone. And the Qs. Key areas, 278 just above there, and then we've got 280. By the way, this is, let me just double check something. This is confirmed, but we have to raise the targets potentially of that. So you're still watching for a close above this key high, 279.49. That's the only thing that triggers the double. I would really pay attention to that first target because of where the 4-hour rotation zone is. And you got the gap fill slightly above that. Probably a good play, Rich. Tom, you've also said we only go up from here about like 50 times over the last couple months. So if everybody were to trade, we only go up from here unless you have unlimited pocketbook You're hurting really bad. Just peek in at the markets sitting right, not yet to the middle of this key area, but in about 35 minutes, going to watch where that closes. It's closing in on the middle of the, which is the key area I'm watching to see if we start getting momentum above that. But the real play isn't till you break above these significant levels. Well, and you shouldn't just blindly follow anybody, what anybody says. Is why I don't just call out things, and I also say I don't talk trades. I want people to learn how to do their analysis because you have to own your own trades. You shouldn't listen to anybody just blindly on the internet or YouTube that says buy or sell anything. They should be able to give you reasons or at least methodologies for you to learn. So, with that, if anything major happens, I could probably pop back on at lunch, but that's only if there's major stuff happening. Other than that, I will just be back after the close. Hope everyone has a trading day. If you don't know what I was talking about with the shake and bake, go back and watch yesterday's replay of the live stream, and I will talk to everyone later. Bye for now. You are welcome, Jake. Bye for now.